All right. Hey, everybody. What's going on? This is the agriculture versus bonds chart layout. Now, this is part of the intermarket relationship and intermarket analysis chart layout package that you guys can get. And I really like this one because it's a good signal for potentially bonds, right? If you're someone who trades bond futures or bond options or invest in bonds or trade bond ETFs, and also for people paying attention to commodities and more specifically agriculture. Now, these two have a negative relationship, all right? And that's very evident by the drawings on the chart, but we'll break down why I use this one a little bit more. Now, this intermarket relationship chart compares the Invesco DB Agriculture Fund, which is DBA, and the iShares 20 plus year Treasury Bond ETF, which is TLT. Now, the top panel shows DBA, representing the agriculture sector, while the bottom panel shows TLT representing long-term bonds. The red and green arrows indicate some trends, right? It makes it very simple for you guys. And you can see that DBA has experienced a long-term downtrend followed by a more recent uptrend, whereas TLT has seen a long-term uptrend followed by a recent downtrend. These contrasting movements highlight the inverse relationship between commodity prices and bond prices. Traders can use this analysis to understand how shifts in one market segment might impact another, helping to diversify and hedge their portfolios effectively. Now, one of the main reasons that I'm showing you all this, and one of the main reasons I created this is because bonds are very attractive to a lot of people right now because they are anticipating rate cuts. And there's many different ways that the market speaks to you and send messages, okay? And one of my chart layout packages that I just recorded a video on, um, kind of gives you some insight into when to realistically expect rate cuts, right? Specifically more in the short term, and when you can actually expect rate cuts to be coming in the short term future. And this one right here, is really nice because rate cuts means that interest rates are going to, essentially drop interest rates, right, and specifically treasury yields, they have an inverse relationship with the bonds and the bond ETFs themselves. Okay, so if interest rates and let's say treasury yields are dropping, that would mean that something like TLT is going up because they have an inverse relationship. All right, now this is a max time frame monthly monthly line chart right here. So the main reason I chose this as the beginning page is because it shows you the long-term correlation, right? You can see over decades how this relationship has, fared and been relatively accurate. And you can zoom into this on smaller time frames, right? You can go to a weekly chart, you can go to a daily, and pay, a little more attention to the most recent trends. And that also really helps there very nicely, right? You can see here recently over the past couple months, DBA has been rolling over and starting to pull back a little bit, while TLT is actually getting a nice little bounce here. So this is just one thing that I like to monitor. And again, this is how you guys can use it. This is one of the many different chart layout packages that I put together for you guys. All right, I've got some really great packages that you guys will really love, going over things like this, intermarket analysis and relationships, as well as some of my different seasonality chart layouts that I use. I've got specific trading strategies, market internals, and market breadth as well. So really great stuff.